So is diversification foolish, right? Is it right to diversify in a lot of different things? We have a lot of saying in the financial world today that you should diversify. You should have a lot of different things, a lot of different places. You're going to reduce your risk, have a diversified portfolio, hedge your bets, don't put all your eggs in one basket. Well, and actually, a couple investors that invested in over 70 different passive deals. So 70, that's a lot of different deals to keep track of. Well, Buffett says this. He says, wide diversification is only required when investors do not understand what they're doing, right? Ouch, that kind of hurts a little bit, right? So having diversification, have this huge diversified portfolio is not a great idea. It actually can really hurt you. And I'm gonna get into this in 3 easy steps, why I feel very strongly about this. We're gonna do a great quote at the end. Let's go for it. All right, my name is Bronson Hill. I'm the CEO of Bronson Equity. We do multifamily deals like this. We're also doing ATM machines and car washes and oil and gas, other types of investments. But we also provide educational videos like this one. So I'm going to share the appeal of diversification, because there's an appeal here, right? Wanting to be diversified, wanting to have a diversified stock portfolio or mutual funds, and it can feel really attractive because what happens is you can limit your downside. Let's say you've got 100 companies, 100 stocks you own, and one of them fails, right? Well, you've only lost 1% of your total worth, right? So it's not that bad, right? But there are some things that are really bad about it, is that it can actually limit. So it does limit your downside, but also can limit your upside. Another advantage of diversification is there's less correlation, right? If I'm invested in real estate and I've got oil and gas, ATMs, we do some diversification, which is helpful because maybe real estate and the stock market aren't directly correlated, even though there is some correlation there. But there are things that are less correlated. So if one goes down, the other one won't go down as much. Other things, like if they're correlated, it means maybe they're all stocks of the same industry, they all go down at the same time. Well, diversification can help you to prevent that, right? So, but I'm going to share, like, really the point of this is why diversification does not work. So I'm going to say it again, why diversification does not work. There's a theory that's, okay, well, I can't decide what to buy, so I'll just buy everything. Or I don't have enough expertise, so I'm just going to buy the index fund. I'm going to buy the mutual fund. And usually it kind of guarantees mediocre returns. Well, why is that? It's because you have some high flyers, you have a bunch of duds, whatever. It'll kind of be average or mediocre returns. There's nothing really you can do much better. So a diversified portfolio is not always as diversified as you think. We talk about correlated, non-correlated assets. A lot of things are correlated. When things start to crash in the stock market, we've seen this again and again and again. They go down in crypto, they go down in these other areas. Sometimes they go down in real estate, they go down. Everything can kind of move a lot of times at the same time. But there are things that truly are uncorrelated. They really aren't related to the stock market, that aren't related to the real estate market, aren't related to different markets, that as they go up or they go down, they're really not affected by that. And another thing why diversification doesn't really work is it's really hard to closely watch everything. If you've got 100 companies, 100 stocks you own, you can't know everything about those companies. You can't follow all their quarterly reports. I mean, maybe if you had a full-time job, that's all you did, maybe, but you had 100 of them, it's a lot. So Buffett says this, he says, put all your eggs in one basket and watch that basket carefully, right? And so what is Buffett's allocation? I want to get into Buffett's allocation and how he allocates. And again, this is something, when I was an investment advisor, it was really hard to tell people, hey, this is how you should invest, or these are the ways you should allocate yourself. It really comes down to a personal decision. But Buffett says this, he says that in the past, he said that all one needs is 3 wonderful businesses to get rich. Although he has noted that 6 wonderful businesses could be all the diversification you need. So again, you've got people that have 50 or 70 deals or these hugely diversified stock portfolios. You only need 3. And he said, maybe at most you need 6, right? So you don't need that many, right? If you have more, you just really can't pay attention. You can't really know these companies well. And so I think the whole point is, if you have only so many investment decisions you make, you want to try to make sure you make really good decisions. Buffett has talked about this before. It's almost like if you knew at the beginning of your investment life, you had a punch card with 20 punches on it, and every buy or sell decision was a punch on that card, how would you think about your investment? You wouldn't be in and out of stuff. You wouldn't buy and sell. You'd just be like, okay, I'm making a decision. It's a calculated decision, something I'm going to watch. I'm just going to basically focus on that. It's going to be a long-term decision for me. So that's why really your financial education is one of the most important things you can do. It's the most important things. You invest in yourself, you invest in your learning, you go to great events, you hear about deals, you're constantly looking at different things because you can't delegate that. No one really cares about your money the way you do. And you may say, well, I've got a great investment advisor, or I've got this person that really helps me with this stuff. And well, that's great. But typically people I've found, and this is, myself included, in the financial world, everybody has a financial interest. So they're not going to approach your investments the way you do. if somebody invests in one of our deals, I financially benefit from that, right? And it's the same with just about anybody in the financial world. So you've got to figure out what your financial goals are, what you're looking to do, what you want, how you evaluate things. And if you just give that over to someone else, a lot of times you're almost ensuring you're going to have mediocre results or maybe even worse because of that. So those things are really important. Really the focus here is to educate yourself, learn, focus in, and really find out what your edge is. I have an edge in real estate. I've got an edge in medical supplies and medical companies because of my background in medical. There's certain, whatever you have an edge in and you can learn, you have a passion about, that will give you an edge in investing, right? I love cash flowing investments. I love finding out different ways to really grow cash flow outside of Wall Street. That's an edge that I have. So just want to really encourage you to double down on the educational side of all of this. I want to share this quote from you from Charlie Munger. Now, Charlie Munger is Warren Buffett's partner of many years. I think these guys are both in their 90s now, so they've been doing this a long time. He has this quote. He says, "The idea of excessive diversification is madness. Why diversification, which necessarily includes investment in mediocre businesses, only guarantees ordinary results?" And that's from Charlie Munger. So, think about that. You're basically guaranteeing, they say the same thing, right? Why diversification means you're going to have not great results. So focus in, learn what you need to do. We've been talking a lot about multifamily deals, and I want to share this video with you. We've had some good traction on about how a multifamily deal gets in trouble. It's important that whenever you invest in, the upside, but you also know the risks, you also know the downside potential. So check that out up here. You can learn more about that. And then if you haven't joined our investment club, we're doing deals in multifamily, oil and gas, ATM machines, car washes. Check that out in the link below. You'll love that. We'll start a relationship with you. We can share about our upcoming deals with you. But thanks for taking the time to educate yourself. I look forward to seeing you on the next episode.